This is the Living in Clarity podcast. My name is Brandon Fisher. This is Coach Ratner. And today we have special guest, David Deborin.
Thank you for having me.
David, it's excited having you on today. I have a question. So we're talking about Bitcoin and crypto. So why do you say Bitcoin has no value and that's okay?
Yeah, so it's a great question. I know typically the biggest argument against Bitcoin is the question, well, does it have any intrinsic value? Right? Mm-hmm. You hear that all the time. Well, certain assets have intrinsic value, like gold. I know you love gold.
Yes, I do love gold.
It has some intrinsic value, although we can get into a little bit of the debate there, when in reality it has very little intrinsic value.
Not like it used to. It's not really used in economies anymore. It's not except jewelry in India.
Right. It's, if you take away the speculation of it, hey, can I see it as an investment vehicle? Can I see it as a store of value? What you really have is you have a metal that you can use for certain things. It's somewhat of a conductor, it's malleable, whatever, but really the price you pay, the value that people put on a piece of gold, virtually all of that value is speculative.
$1,640 an ounce. Anyway.
Right. And so typically, we have to agree on a definition of intrinsic value. What is intrinsic value? But if you just search it up on like Investopedia or something, it'll tell you something like, well, strip away the speculative aspect of it, what do you have? Does it have a use case? Does it provide some sort of value that's intrinsic? With Bitcoin, that is no, right? But that doesn't mean it doesn't have value. So the way I like to say it is, hey, if I have a product, right, and if you use this product, depending on your use case, depending on your situation, it's going to save you time and money, right? You'd probably find that product valuable, right? You'd probably purchase that product or exchange some sort of value, right, for that product. And that's what you can say about Bitcoin. In certain cases, right, depending on your geographical location, depending on what country you live in, depending on your financial status, Bitcoin definitely can save you time and money. And the biggest thing here is, typically when you have these conversations, you talk to a lot of people in the United States, right? Bitcoin really doesn't have much value in the United States because the United States has the best banking system relative to every other country.
Right.
The US dollar is the reserve currency. Every country in the world essentially depends on the US dollar. But if you look at most of other countries, just in this past year is an amazing example. You have the British pound down 40% relative to the US dollar just in the past year, right? You have the euro, down 30% and more relative to the US dollar.
Let's all go to Europe. It's going to be cheap, right?
Exactly. The yen, the Turkish lira. If you had 300 Turkish lira, 3 years ago, it's worth about 100 Turkish lira right now. Right? So when you look at, and I'm not even bringing up Venezuela and Argentina with hyperinflation. So a lot of these countries don't have access to a decent banking system. On top of that, their own currencies in the country they live in are horribly managed, right? The governments don't know how to manage it properly. And so you have this currency, right, Bitcoin, where all you need a few things, but you need an internet connection, one, and you need to download some software, just like an app or something, to be able to receive Bitcoin. You need a couple more steps to be able to send it. So it's not simple. However, if you don't have access to a bank, you have this currency that's not controlled by a government, which from just the evidence we have it, virtually every government is very bad at controlling their own currency. Even the U.S. isn't great at controlling their own currency, as we've noticed just from this past couple of years with inflation, right? And so, if you don't have access to a banking system and your own currency, you don't want to store it in your own currency. If you're in Argentina, you don't want to store it in your own currency. So you have access to this currency that has no authority over it, no single authority over it, on top of which it's also a finite resource. So unlike any other currency in the world where you can print
can't
as
inflate
much
it.
you can't
so
inflate it.
I don't hate to interrupt you, but I want to understand, so are there any countries that have taken Bitcoin, I know there are some, as their currency?
No.
I thought it hasn't, like El Salvador. Wasn't there a country that said Bitcoin is now our currency?
No. El Salvador, what they're doing is they're buying up Bitcoin.
Right.
They're essentially, that was more so a PR. Kind of. I would say it's more of a marketing hype scheme type of thing, trying to attract, tourists, not just tourists,
Wealthy.
but also a lot of just wealthy people from the United States, for example.
Right.
You see Puerto Rico was doing this. Portugal was doing this, where they had basically no capital gains tax on crypto. They're changing that now.
Right.
Now in terms of the regulatory environment, that's not going to happen anymore in the next 3-5 years, most likely. So that was really more of a PR marketing play.
Right.
No government is going to say, I don't expect governments to say, hey, Bitcoin is going to be our national currency, because that would mean they wouldn't be able to control it, which a government needs control.
So what's keeping governments from printing their own blockchain currency?
Well, really, a blockchain, it's the most overrated but underrated and misunderstood concept. What a blockchain is, it's simply a database.
Yeah.
It's a database that once you put data in it, it becomes very, very, very difficult to modify that data.
But in order to make it safe, you have to have thousands and thousands and
Correct.
thousands of people monitoring that blockchain.
Correct.
Right.
Correct. And that's why the Bitcoin blockchain, what it is, where the value is really, some of the value proposition in it is the fact that it's the most secure database in the world, because it would cost so much money to modify data in it. And it's also not controlled by a single entity. And the decision-making power of what actually goes into this database, this blockchain, is also distributed. If I have enough computing power, enough money for it, which now it's a little bit expensive,
Yes.
so the barrier of entry is high, but I could run a replica of this database and have decision-making power in what goes into this database, which is really quite something. It's also distributed all around the world. Now, the thing is, a blockchain, the first question you have to ask is, this system that I'm trying to integrate blockchain with, I'm trying to apply blockchain into this existing system to improve it, does it severely lack trust? If it doesn't severely lack trust, then the answer is no, already, automatically. And so a government doesn't care about trust.
No, they want control.
They want full control.
Right.
So the idea of a government and blockchain, anything, is literally, they're like, it's like oil and water.
So what you're saying, just to be clear, is that
Yeah.
although it is something that has some sort of value, for a government to take it on as their currency is something that's unlikely to happen.
Yes.
Yeah. So then what if it's not a currency, which I never believed it was a currency? I think we have podcasts last year that we talked about that. But then what is it?
So I do think it is a currency. It's just not a national currency.
Can we call it something instead of a currency? How
Sure.
about a store of wealth, like a savings deposit,
You're saying it like it's a bank?
yeah.
If you want to make it more abstract, we can call it a medium of exchange into which we can transact value.
Yeah.
Right. For example, like, let's say Brandon, he's like, yo, David, I want some falafel. And for you guys, at home who don't know, falafel here is like half your mortgage, right? So it's like, hey, could I get a Bitcoin or something? Lend me a Bitcoin. And so I can send you a Bitcoin. You can exchange it for the local currency, the shekel here, then buy a falafel. Or you can also get that Bitcoin. And there's a lot of websites now that will accept Bitcoin, right? This currency or something of value in exchange for, a mug or a cup, something else of value, right? So it is a way to transact value, right? Whether you want to call it a currency or not, I think I understand what you mean. It's not a currency in the sense that it's not a national currency. Every currency that we kind of affiliate to is a national currency backed by a federal government.
Yes.
This is a currency. This is a way to transact value. It's a medium of exchange, right? Because that's what a currency is. Currencies aren't supposed to be backed by anything. Really?
What about until 1933, the American dollar is backed by gold?
Correct. Which is, in my opinion, one of the worst decisions ever made.
To get off gold.
To get off gold.
Oh, I agree with that. I mean, because you would have a $20 bill. You can go to the bank and you turn to a bank and you get a $20 gold coin, because the price of gold was set at $20 an ounce for I don't know how many years. It's 1933 went off, and now your currency. And in fact, 1971, I believe, the U.S. government said you couldn't even allowed to own gold, and everyone had to turn their gold in. I don't know what happened then. Yeah, you couldn't even own gold.
Imagine something. We're basically saying, hey, there's this thing. Supposedly it has value. There's this thing, right? And now it's not backed by anything finite. Right?
And it was one day.
Sense.
During the Great Depression, it seems like an odd time to get off of the coin. What happened?
Well, that's a different question. It was more so that's a more complicated question. I don't know enough to really tell you an answer. I mean, I will say that it's probably part of it is the fact that it became difficult, right? It just became difficult to back every dollar with
gold,
right? Gold, right? For certain reasons, especially it didn't happen back then, but with the rise of the internet, it makes sense. It makes sense that the dollar be digital somehow, but it still should have a finite backing, ideally. If you look at the money printed from 1971 up until now, I mean, it's insane is an understatement. I mean, there was more money printed in the past 2 years than there was cumulatively in all the years prior.
That's really hard to think
about that.
That's scary.
So the United States government is talking about a digital currency. They're investigating, and they're talking. And by the way, this is very big because talking about control, they can control. If they do this, they can control your currency. They can turn you off. They can shut you off.
Wow.
They can limit you to buy certain things. Like if you're a kid and you're not 18, they make sure you can't buy cigarettes and alcohol. Right. But it's going to put more control, and people are very much against. I'm very much against this. But it's gonna. It's what they did. The government did. I don't know. Maybe 20 years ago, they had this law where if you had more than $10,000 cash, you deposit it. You actually had to fill out a form. Mm-hmm. Where'd you get the cash from? It was to stop, drug laundering and money laundering.
Yeah. Now it's even more extreme. Like now, anything. It's starting to go ahead.
I'm just wondering if Bitcoin is being used by drug dealers.
Oh, this is an excellent question. This is the single biggest misconception about Bitcoin. The Bitcoin blockchain is a public database. Like when I send Brandon 1 Bitcoin so he can buy his falafel because it's very expensive.
That's got to be a great falafel. You got to
have a bite. Very good. Very good.
$21,500.
I mean that's half price since last year.
Yes,
right.
Yes,
exactly. Yeah. When all transactions with the Bitcoin blockchain it's not technically a database. It's a ledger of all transactions that have ever occurred. It's all public. There's an audit trail. If you're a criminal, you'd be stupid to use Bitcoin.
Is your name on the ledger?
No, so your name is not on the ledger. A string of numbers and characters that represent you, right, is what's being seen.
Can that be found out who that person is?
You can, yeah.
Is it hard?
It depends. Like, for example, like if you can track down your IP address and like you can monitor your habits. And it's not too hard. That's how, the Silk Road, you think back to the Silk Road where a bunch of, drugs were bought with Bitcoin and stuff like that. They basically all got busted for a reason. All the big boys got busted because there's an audit trail. It's all public. Yeah. If you want to be a criminal, you use physical fiat currency.
This is why I like Rolex watches. And gold coins, because you can't hide. Like there's no name on a Rolex watch.
Right, right. You want to use physical goods.
Yeah.
When it's digitally, it's a digital database that anybody can see, and it's auditable. You don't want to use that.
So, you have something? Go ahead.
No, you first.
My question is: would you, if you had money to invest right now, would you put money at $21,500 a coin into Bitcoin?
That's an excellent question.
I'm just curious.
So, this really depends.
Well, of course, that's the answer.
Of course. If you had money, let's say play money, you had play money, then at this point, if you actually ask me what I think, I do think it's going to go lower to around the 14, 16K range.
Okay. You heard it here.
Exactly.
Well, come back to you in a few months.
Right.
The question is what will go up to afterwards.
I think eventually, I'm going to say within 5 years, it's going to go back to all-time highs.
You think
That's
so?
what I think, yeah.
5 years. It's a long time compared to the
It is a long
No,
growth.
I still invest in it if I knew that.
Yeah.
For sure.
It is a long time. The issue is crypto, Bitcoin, has literally only been around since 2009, right? In very generous macro economic conditions.
Yes.
Only. There's literally no data on how does Bitcoin do in poor macro conditions.
Yes.
Mm-hmm.
And this is what I'll tell you. Like, cryptocurrency, the entire industry, in terms of price, will not do well. It only does well. In fact, it only does well under the best of macro conditions. So until that happens, which it's not happening anytime soon, like Bitcoin and any other cryptocurrency, they're not going to perform very well. That being said, I think Bitcoin is here to stay. I think it's become legitimate enough for people to get enough value out of it. And it's such a tiny little industry. Literally no institutions are in it.
Yeah.
What has to come first is regulation.
Right.
Because institutions cannot pile into something that's not regulated. So that needs to come first. But
doesn't that take out the reason why people have Bitcoin, because it's not regulated?
Correct. So
is that
an
issue?
It's an excellent question. This is a very fine line, but what Bitcoin needs is good regulation, not bad regulation. And honestly, I would take okay regulation. Okay, as long as it's not banned, as long as it's not, which wouldn't make sense. I have a whole other thing on what the U.S. government should do, but it would take a little bit of a long time.
Next podcast.
Next podcast, exactly. But it's Bitcoin needs good regulation. You need to have definitions and infrastructure in place for big institutions. I mean, you think about the pension system, pension program in the United States. It's a multi-trillion-dollar industry. Imagine if they take like 0.1% of their capital and put it into Bitcoin. Bitcoin technically has a market cap of about $400 billion. But what is that really? How is market cap calculated? It's calculated by the circulating shares or circulating tokens times the price.
Right.
But the price that you see when you search up on Google is just, hey, what's the price on Coinbase? What's the price on FTX? What's the price on Binance?
Right.
Average them out. That's the price we see. But there's actually very most of the coins in circulation are not on exchanges. So But
when they trade, do they have to go through an exchange?
Correct. When they trade, they have to go
through
an exchange.
That price has to be is months. If I buy something for $2,100, a tenth of a Bitcoin,
yes,
the price gets
correct
printed as a trade.
Correct. That is correct. However, most Bitcoin in circulation is not on exchanges. It's just held by people.
I have a question.
This might sound ignorant, but it sounds like that's how stocks work too. Stocks, you only see the price of what it was traded at last.
Yeah, but there's a buy and sell.
Correct.
Okay.
Correct. The only difference is you typically don't have a large percent of your circulating shares held offline.
Okay.
That's not in it's a matter of liquidity. Like, more important than
Sure.
market cap, liquidity is what determines volatility.
Yeah.
So Bitcoin is a very, very illiquid market, hence it's volatile. So you have this 400 billion market cap, but let me tell you, if you do a $10 billion sell right now, it would absolutely crash the market, crash the price.
It would.
It absolutely would, because there's just not enough liquidity on exchanges. Like, there's not a lot of money in the system. There's not a lot of money in the crypto space, in Bitcoin.
Is there a buy sell on crypto? Like, if I go to one of these Coinbase places,
Correct.
Is it say buy bid 2,100, sell 2,105?
It's exactly the same as how a share would work.
It is. And how tight are the spreads?
It depends on the exchange, but the spreads are not as tight. It's an immature market, less liquidity, so it's a more inefficient market. No, stocks are much more efficient.
Sometimes less than a penny. I mean, the buy and sell, exactly the same.
With stocks, you have such optimization that you have literally market makers, like entire companies, that their sole purpose is to provide the smallest spread possible. Right. Yeah, you don't have that in crypto.
I'm curious. We've only been talking about Bitcoin so far, but crypto has other uses even beyond whatever we're calling the currency situation.
Correct.
I want to know how the competitors and how you think about the competitors, who they are, who we can believe in, and also some of the other uses that are being investigated and invested in for the future.
Sure. It's a great question. So basically, there's no real competitor to Bitcoin. I will kind of get to why, but okay, so I'll say this. The biggest competitor that's kind of deemed as a competitor, even though it's just different, that you might hear of is Ethereum.
Yeah.
Right? That's the main one to focus on. It's actually what I do most of my focus on, is Ethereum, which is basically like Bitcoin in the sense that it can be a currency, right? You can exchange Ether, right? Ether for some good on a website or some fiat currency, something like that. But remember how I was saying that the Bitcoin blockchain, it's this database of transactions. That's all it is, right? And it's just code. It's all code, right? And Ethereum, what Ethereum is trying to do is it's trying to add an extra function. Not just, hey, you can transact value as a currency, but you can actually upload code to this database, logic, that performs certain actions. So instead of with Bitcoin, all you can really do is like, hey, I can send some Bitcoin from this address to that address, right?
Right.
From my wallet to your wallet. Ethereum allows you to essentially upload more complicated actions. Like, hey, if this address sends 1 ETH to Brandon's address, then send half of ETH from another address to some other address. It gets more complicated. And so on Ethereum, you can essentially, this kind of opens up a whole world of possibilities. Albeit it's very limited because blockchains do not scale. And we can talk about that in another thing. That's the biggest issue with blockchains is it simply cannot scale. It's down to a science.
And that's also one of the positives in it. That means it's a finite amount.
No, that's different. That's different. But it can't scale because, this is actually the simplest analogy. If I ask you what you want for lunch tomorrow, right? Yeah. Just you can give me a pretty quick answer.
Salad.
There we go. But if I ask you, hey, coach, what do you want for lunch? But you have to ask 48 of your other friends what you want for lunch.
I'm not going to do that.
Well, A, you might not want to do that, but it's going to take a while.
Yeah.
Right? That's what a blockchain network does. Essentially, a transaction occurs. You have to ask a bunch of people, everybody in the network, all those machines, all those computers, to verify that transaction, come to consensus, and then, only then, can the transaction be uploaded onto this database. So it's inherently slower. It can't scale for that reason because you get more distributed decision-making power, decentralization, but in return you don't get scalability.
The more people that use it, the more people you have to ask permission for.
Correct.
So that gets to be unusable after a while.
Correct. There's yes. In Bitcoin's terms, yes. Now there are ways to kind of circumvent that.
Yes.
It gets a little technical, a little complicated. You could basically build layers on top of the underlying protocol. But yes, fundamentally, blockchains don't scale. That's why I think Bitcoin at best will serve as an alternative, not as something that overtakes the existing financial system. It just simply cannot scale. And yes, I can get it. I've been in arguments with this. It's not impossible, but it's very, very improbable in my opinion. Simply for the fact that it simply cannot scale.
So are there other users besides this currency stuff that are being developed?
Yes. So we were talking about Ethereum, where you can essentially, instead of just really, really one function where it's like send Bitcoin to X wallet address to Y wallet address, Ethereum allows you to upload code that's more complex. So what you can do, for example, is you can create decentralized lending and borrowing platforms. So
which you did.
Which I did, correct.
Which is called?
Which is called Moonwell.
Right.
Moonwell. And it's not, this isn't a new concept. If anybody's familiar with crypto out there, it's called it's a compound fork. Compound is essentially this platform where you can deposit. Let's say you have $1,000 worth of Ethereum, right? And there's an investment opportunity or something, and it requires $800 worth of a different cryptocurrency. I have $1,000 worth of Ethereum, but I don't want to sell it because that would trigger a taxable event. And I also think Ethereum is going to appreciate in value, so I don't want to lose out on those gains. So what I can do is I can simply deposit my $1,000 worth of Ethereum, and then it's called an over-collateralized loan. I can then get $800 worth of a different crypto, invest that, eventually pay this back. And the way this is regulated is all through code, algorithmically. If the value of your collateral, right, goes below the amount you borrowed, you get liquidated. And this is all done automatically. This isn't controlled by anybody.
Well, how do you liquidate if someone borrows $800 worth of Bitcoin for your $1,000 worth of Ethereum, and he spends that $800 worth of Bitcoin?
Correct.
How do you? Oh, you would sell the Ethereum.
Correct.
I got it.
Yes.
So that once it hits that amount and it goes below, then you sell it.
Yes.
Automatically.
Correct. And there's nothing you can do about it because we don't control it.
What do you charge? What does Moonwell charge interest on a transaction?
It's
not free.
No, it's not free. It depends. So there's a couple of factors. There is the natural interest rate, essentially, based on the ratio between buyers and sellers.
Okay.
And there's also incentives. Like certain assets are incentivized, right? Certain assets, like the community will vote and determine if certain assets will have greater interest rates just to incentivize them. It's
What do you mean great? You mean lower?
low. It could be lower or higher,
right?
Actually, depending on the use case. But like Compound, for example, which is like the mother of all lending and borrowing protocols in crypto, there's simply a natural. It's mostly based off of the natural ability to, or a ratio between buyers, or lenders and borrowers, and that determines the interest rate.
Is Compound a company, or is that what is Compound?
The thing is, in crypto, it gets very technical because there's like layers of entity formation.
Yes.
Right. Because it's in regulatory gray areas, right? It's just not regulated. It's tough for companies to operate. Compound they'll tell you is a protocol, is a platform.
Okay.
There's technically another team that helps operate this protocol.
Yeah.
Which I forget what their name is, but
this all seems like black market to me.
It's gray market. It's gray market.
Okay.
Gray market.
Unfortunately, we're running out of time, but it was such a pleasure to have you on the show. Before we wrap up, though, I want to give you a chance to share any final thoughts to our listeners, maybe about Bitcoin or just about your own philosophy. You're such an impressive person.
Thank you guys for having me. No, I think Bitcoin is one of those things where whether you find there to be value, whether you want to invest in it or not, whether you see it as a worthy investment, I think it's very, very important to learn about it because it tells a lot about how the financial systems of the world works, how human psychology works, how game theory works. You don't even need to know much about technology, honestly, but if you want to go even deeper, then there's like, how does this technology work? But I would say the technology in terms of for anybody listening out there is actually not the most important thing. The most important thing is the fact that why did Bitcoin come about? What is it trying to solve? And you'll see that why it came about is it was a response to the 08-09 financial crisis.
Yes.
When the distrust for the financial world, specifically the United States, banks, right, was at an all-time high, and there's a reason for that. You'll realize how crazily inefficient the existing financial system is, and that it's a very, very, very fragile institution or organization.
We saw that in 2008.
Scary thing.
It was really scary. It was like we actually thought Bear Stearns running the business. Like we thought the whole financial system was going to collapse.
Yeah.
Do you know the price of banks went down that were trading $10 a share went to like pennies?
Yeah.
Wow.
To nothing.
It's crazy.
Yeah.
And it would have been even worse if the government didn't bail them out and bail some big players out, which you can argue it's just a Band-Aid. We keep putting Band-Aids on.
We're reacting to urgent instead of what's important. Like the whole thing, urgent versus important. We have an urgent situation, we fix it.
Yeah,
this is what our life's about. We want to make sure instead of having to put Band-Aids on things, we deal with what's important in life.
Right. David, is there anywhere that our listeners can find more about you, hear more of your philosophy, thoughts?
That is an excellent question. I was thinking about this yesterday, and honestly, I don't have a place really.
Okay.
I mean, I have a LinkedIn. If you want to message me on there, that's perfectly
fine.
Start with
LinkedIn.
Just David Deborin. I'll actually check my LinkedIn now.
But if you have questions, you can email us at what's it called?
It's still the Fish and Coach Show at gmail.com.
The Fish and Coach Show at gmail.com. We have to get a new email address.
Yeah, we're working on it.
Next, we're going to have you on again for sure. You're really good.
Thank you,
really
guys.
Thank you so much for joining us, David, and thank you for listening to the Living in Clarity podcast.
All right, we'll see you next time. Thanks for joining us on this episode of the Living in Clarity podcast.
If you enjoy what you just heard, make sure you like, subscribe, and comment with any suggestions for future episodes.
We'll see you next time.